Hi, this is a favor for one of my friends on the bodybuilding forum. Wanted me to take a quick look at Cisco. Alright, this is the 5-year chart right now. See if I can get the size of the chart a little more aesthetically pleasing. And there we go. So as usual, we could draw a bunch of lines on it. So I'm not going to be too concerned with things before 2009 because it's been moving in some kind of consolidation pattern or sideways movement before that. So I'm going to focus more on what's happening now. Okay, right now we can take a look at this from mid-2010 to the present and maybe find, we have two possible results. We can say that this is loosely a channel. Actually, that channel is actually pretty concrete aside from this specific one right here, and actually we can probably get a better look at things if we go to the daily. So there's our daily graph there. Channel is alright. I don't like the quality right here, but apparently that was right before they had one of their bad earnings. Man, I gotta say, Cisco has a history of doing some pretty crappy earnings in recent times. But anyway, we could call this a channel here. You were wondering if this might be a falling wedge formation. A falling wedge looks more like, let's see if I can find one on this chart. Falling wedges are usually short-term patterns, like lasting only about 3 weeks, maybe 6 weeks or so, but they're usually not long-term patterns. Like for instance, we'll take a look at this right here. If a falling wedge does appear in Cisco, which is a bullish pattern and would in essence end the downtrend that it's in, it would look something like this. So we'd see the channel happening, and then suddenly we could draw a trend line like that, and there would be one at the bottom too, and then it would break out the tops. That's normally what happens. It's first a channel, and then as the downtrend becomes weaker, it will explode from a falling wedge, and then eventually it will break the upper trend line of the rectangle, therefore starting a new uptrend. Okay, now in the meantime, taking a look at what's happening with the actual stock, I have the slow stochastic here and the RSI, and right now we're not getting too much help from the weekly. See if I zoom out if we get anything special. No, really nothing, not too much help on that one. In the stochastic, we have a oversold condition with a potential buy coming up, since and looking at the history, the buy signals that were before in the stochastic, the slow stochastic. Let's see, we have a sell there, buy here. Actually, I'll denotate these sell signals with a square instead of a circle. So that was a buy, and this was a sell. Taking a look at how reliable they were, since this is the weekly chart, I'll actually, let's see, that was a sell signal. It was alright, but before the time that the buy signal happened, you would have lost money. So with this one, the other signal, and conclusively I can pretty much say that the weekly stochastic is it lags the market a little too much. So let's go to the daily stochastic and jump to a 1-year chart perhaps. And here's our 1-year chart of Cisco. Stochastic now says that right there, if you wanted to, there would be a buy signal today. And this also corresponds with the fact that it's sitting at the bottom of the channel. And in addition, the RSI is right about to break its previous low. Therefore, there might be a buying opportunity coming up, if not now. And taking a look at the history of times that there have been a buy signal when it's been down, first, there's a buy signal when went into the oversold territory, and as we see, it was a complete failure. Okay, so that's a warning there. Other times where there have been sell signals, there's a sell there, a buy here, a sell here. Seems a little too volatile, and even looking at the other signals, they are not as reliable. So I don't know what to think right now. Definitely the channel is usually a bearish formation if it's down like this, and they're usually hard to break out of. And even taking a look in the, let's go with this chart. Today we had low volume with an up day. On the entire market we had very low volume on an up day. This is the Dow Jones, low volume, QQQQ, low volume again, and actually in the Dow Jones especially, this is a tombstone candle pattern, which is once again bearish. So for right now, maybe hold off on making a trade completely. If it breaks below this line definitively on high volume, short sell it. Till then, wait till at least it pierces a moving average. I'd prefer the 200 since that one tends to be the most reliable. And go to 9-month, let's see. The 20-day, that means the short-term trend is up. The 50-day, that means the intermediate-term trend is up. The 200, that's the one we're looking for. And if it breaks the 200, it'll probably also break the channel. So, hold off for now. No trade.